and welcome. This is the Market Wrap. I am Agam Akil. 2 days of strength for the benchmark indices, with the Nifty moving above the mark of 10,800 on an intraday basis, and it's settled not too far away from that level. Let's take a look at what's really happened today. We were looking at Tata Steel as well as Tata Motors advancing in trade, and because they have a reasonable weight, we've seen that lend strength to the index. We have seen good gains coming in private sector banks such as ICICI Bank and Axis Bank as well, and of course the likes of Wipro and Indiabulls Housing Finance also advancing in trade. On the losing end, some profit taking in Titan Company, but that was, do remember, it was one of the biggest gainers yesterday. And other than that, you know, if you can discount Eicher Motors, all the other stocks on the Nifty have lost less than 1%. Now in terms of the NSE 500, when it comes to the advanced decline ratio, it's a reversal. It's an exact reversal of what we saw yesterday. So today we have 4 gainers against 1 loser, and on the gaining end, well, Unitech of course is a 5 rupee stock, so any move would be quite substantial. But IFB Industries is up to nearly 13%. Avanti Feeds continues its up run, as does, well, Kaplan Point and Time Technoplast. All these stocks are looking at substantial strength. On the losing end, JBF Industries continues to move downwards. It's the same for Manpasand Beverages along with Bhushan Steel and Quality. So some usual names showing up on the losers list: Jayaprakash Power and Phoenix Mills among others, so showing some weakness in today's day of trade. But let's get a perspective here and try and understand what's going on. We're going to get in Neeraj Shah, markets editor, to get a better understanding of what's happening in the markets. Neeraj?
Well, anybody's guess, but yeah, 2 days of gains. The market's holding on to key levels. Almost all the experts that we spoke today mentioned that as long as we stay above the 10,730 level, all seems to be hunky-dory for now. No reason to worry. So a bit of an uptrend continues, aided arguably by the global markets. When we shut shop, the European markets too were doing reasonably okay. Right. The market breadth was fairly positive today. The volumes were reasonably okay today as well, even though this is the first week of the new series. So the volumes were doing reasonably okay as well. And the imminent scare about continued fall in the mid-cap and the small-cap end of the market just goes into the backdrop a little bit. It's not completely gone. I don't think anybody is saying that it's out of the window as yet, but maybe that's just the scars of being bitten so badly over the last 1 month that is making people say so. Valuations on a lot of companies, Agam, as we stated, with the correction that's happened, are looking a lot more reasonable than what they were. Right. And the RBI commentary on growth probably only giving some more ammo to people who wanted to put some money to work. Keep in mind though, redemptions, not in the mutual fund industry, but in the portfolio management industry, are not done as yet. So the mid-cap and the small-cap end market could see some stock-specific action. Right. But let's wait and watch. The Fed policy next week probably holds the key.
Right, absolutely. So the good quality stuff looking up right now. Thanks, Neeraj, for bringing out those details. But this is what our technical analysts have to say about the levels that we need to keep an eye on the benchmark indices. Listen in.
Nifty has broken out above this 10,730 on the Nifty, and as long as it is above that, it can go to 10,900 or maybe even 11,000. So as long as 10,730, 720 is held, it is bullish.
I'm looking at that high post Karnataka results, 10,900. That is a key resistance zone for me. So until unless we take out that resistance, I still believe we'll be in that zone from 10,850 to about 10,500. Today, most of the move is already done, so I would probably wait for a minor dip. We have already witnessed a minor dip from the highs of the day. So close to about 10,750 is another good level to again go long in the market. Overall, stance remains bullish because the sharp move that we've seen yesterday and today, follow-up move post a gap-up opening. So overall, stance remains bullish. Use minor intraday dip to close to about 10,750 to go long in the market, looking at a target of 10,900 immediately.
So let's talk about some key gainers in today's day of trade, and we're going to shift focus to shrimp companies and, well, shrimp feed. We have seen a substantial surge in stocks like Avanti Feed, which was under the ASM, and it did see a lot of volatility, well, if you consider the period prior to the 2 days. And after that drop, there has been a substantial recovery in the stock price as well. But to tell us a little more about what's going on in the sector, we have Somit Sarkar joining us to give us an idea. Somit?
So it was not only Avanti Feeds, also Apex Frozen Foods and Waterbees, which saw a good surge. Apex and Waterbees had hit an upper circuit of around 5%, while Avanti Feeds was up close to 12% in trade today. Now, you see the US data for shrimp imports had come in today, and that showed an 18% surge in the shrimp export volumes, from India. Now this is, however, the rate of 18% is the lowest in the last 8 months, but it is still a growth of over 18% compared to last year. Also, India now exports nearly 35% of the total shrimp imports in the month of April. Now the prices though have come off a bit. It has fallen for the 6th consecutive month, and in the month of April the prices averaged around $9.56 per kg, and it has fallen around 11% from its peak of around $10.73 per kg. So that's the reason that is the rise of shrimp demand that has led to a surge in these stocks today.
All right, Sumit, thanks for bringing out those details. Of course, we continue to watch out for some of these stocks which have seen a lot of strength in the recent times. But Hindustan Unilever from the large cap universe is the other stock that I'm keeping an eye on. We've had the analyst meet, and there were a lot of takeaways from HUL. First, and perhaps the most important one, was the reliance of HUL's on data analytics, and they don't only use it for cost efficiencies, but they're also using it to study different markets and eventually base the strategies on some of these studies. Of course, they've spoken about tools such as Jarvis, which puts in predictions, and based on that, HUL does make a lot of decisions which have been speedier because of some of these analytic tools. That said, the management has also spoken about the home care segment. Now, nearly 30% of your revenues come from the home care segment, and Surf Excel in this case stands out in terms of the key brand leading in. Of course, the management has also spoken about the considerable traction they're seeing in fabric softeners and conditioners as well. So a lot of these aspects are playing out for Hindustan Unilever, and a lot on the back of the management commentary, a lot of these analysts may not have changed their ratings, but there has been some tweaking of price targets. For now, HUL is currently trading near its lifetime highs, as you can see here. Its lifetime high was somewhere around 625, not too far away, and it's been a good day of trade for HUL too, inching back towards the lifetime highs, well above the mark of 1600. So we will be watching out for this one as well, and that could perhaps have a bearing on how the benchmark indices move in, considering it's a reasonably heavyweight. But with that, it's a wrap on the markets, but lots more lined up, so stay tuned in a Bloomberg Quint, and we will keep bringing you more.